This is question number 25 from exercise. So our problem is to decide whether to sell in a raw form or process it further. The Heather Honey Company purchases honeycombs from beekeepers for $2 a pound. The company produces two main products from the honeycombs, honey and beeswax. Honey is drained from the honeycombs, and then the honeycombs are melted down to form cubes of beeswaxes. The beeswax is sold for $1.5 a pound. The honey can be sold in a raw form for $3 a pound. However, some of the raw honey is used by the company to make a honey drop candies. The candies are packed in a decorative container and sold in a gift and specialty shops. A container of honey drops candies sells for $4.4. Each container of honey drop candies contain 3/4 of a honey drop. 3/4. The other variable cost associated with making the candies are as follows. So these are all the variable cost. This cost is associated with the candies. If we decide not to make candies, we can avoid all of these costs. If we choose to make the candies, then we have to incur all of these costs because these are the variable cost and they depend on our activity. The monthly fixed manufacturing overhead cost associated with the making candies are as follows. These are fixed costs, so most probably we are not able to avoid these costs even though we decide to make candies at not. Master candy maker's salary, and then depreciation of candy equipment and the total fixed cost. The master candy maker has no duties other than to oversee production of the honey drop candies. The candy making equipment is a special purpose equipment that has been constructed specifically to make this particular candy. The equipment has no resale value and doesn't wear out through use. A salesperson is paid $2,000 per month plus a commission of 5% of the sales to market the honey drop candies. The company had enjoyed robust sales of the candies for several years, but the recent entrance of a competing products into the marketplace has depressed sales of the candies. The management of the company is now wondering whether it would be more profitable to sell all of the honey rather than converting some of it into the candies. So we have two options which we want to evaluate. One is sell all the honey. Other is convert it into candy. We know the rule. We have to identify the relevant cost first. Which cost we can avoid, which cost is differential. Only these are the relevant costs. Then we have to identify the revenues, relevant revenues. We have to take the difference between the cost and revenue. If our revenues are higher, then we should choose the options of converting into the candy. If by converting into the candy our revenues are higher, we will go for making the candies and selling them in the form of candies. If our revenues are lowered by converting into the candy and selling in the form of candy, then we will choose to drop our candies units and go to sell only in the form of honey. So what is incremental contribution margin per container from further processing the honey into the candies? We have to decide our contribution margin in both forms. To calculate the contribution margins, uh, we know our contribution format income statement. So contribution margin is sales minus the variable cost. So what is the selling price? Selling price of candy is 4.40. What about the honey? 3/4 of honey has a selling price of $3. By solving it, we'll have a price of one container which will be 2.25. Incremental revenue will be 2.15. What about the incremental cost? We have most of our variable cost here: decorating containers, some other ingredients, some direct labor, and variable cost. Plus, there is some commission, 5% of sales of the candies. So we have to include commission. Price of candy is 4.4 and we have to pay 5% commission on each, which will become 0.22. By adding all of these costs, we'll have 1.17. So our incremental variable cost is $1.17. Now we have our incremental revenue and incremental variable cost. We can calculate our incremental contribution margin, which is revenues, incremental revenues 2.15 minus incremental costs 1.17. So our incremental contribution margin will be 0.98, which shows that by selling candies we can have a positive contribution margin per container, which means the company should continue to make the candies. That's our first part. What is the next part? What is minimum number of containers of the candy that must be sold each month to justify the continued processing of honey into the candies? Explain and show all the computations. There is some fixed cost which need to be covered in any case. Therefore, we need some minimum number of units to be sold to cover that fixed cost. So here is a fixed cost associated with the candies. Right from it, we can avoid this 3,880 because we cannot avoid this depreciation. If we fire the candies maker, we can avoid this salary. So most avoidable costs include salary of master candy, which is 3,880. If we are not making candies, then we can also avoid this fixed commission of 2,000. Sales commission 2,000. So the total cost we can avoid is 5,880. This is our avoidable fixed cost. How many units can cover that much cost? We can use this formula to calculate that. Avoidable fixed cost divided by incremental CM per unit. So total cost which can be avoided by stopping the production of candies is 5,880. Contribution margin for one container is 0.98. Therefore, if we make 6,000 containers of candy, then we can cover all of these fixed costs. Only in that case, our decision to process the candies further will be profitable. Otherwise, we should go for selling honey and stop making the candies. Let's see the calculation to justify to prove that answer. So here we will take three different uh, options of containers. One is 5,000 containers, then 6,000, then 7,000, to see what will happen if we increase the number of containers. So these are number of containers which the company can sell. Okay, so first thing, sales. What will be our total sales? Our sales per containers are 4.40. So in the first case, we are selling 5,000 containers, multiply it with our selling price which is 4.4, and we will have this one. In the second case, we will have 6,000 containers multiplied with the selling price, we'll have our sales. Third case, we'll have 7,000 containers multiplied with 4.40. These are our sale numbers. From sales, we deduct variable cost. Here we have incremental variable cost, which is 1.17 per container. Therefore, 5,000 multiply 1.17, 6,000, 1.17, and third is 7,000 multiply 1.17. From these two, we can calculate incremental contribution margin, which is sales minus variable cost. So this is incremental contribution margin in all the three cases. From here, we deduct our fixed cost. We have just calculated our fixed avoidable cost, 5,880. This is a fixed and remained fixed in all the three cases. Now we can have our total contribution to profit, which will be our contribution margin minus our fixed cost. So this will be our profit in all the three cases if we choose to make and sell candies. We can also say process further. Let's see our second option, which is selling honey. So now we have to see how much honey we can sell each month. So we know that each container contains 3/4 pounds of honey. To calculate the total pounds, we need to multiply this 3/4 with the number of containers. So in the first case, we are selling 5,000 containers, and each container contains 3/4 pounds of honey. We will have 3,750 pounds of honey. We can sell that much. In the second case, We are selling 6,000 containers of honey, and each container contains 3 or 4 pounds of honey. So total pounds of honey will be 4,500. And in the third case, we are selling 7,000 containers of honey. Each container contains 3 or 4 pounds of honey. In total, honey we'll be able to sell in this month will be 5,250. What is the selling price of honey? Here they told us that the selling price of honey is $3 per pound. How much money we can make by selling that much pound is we just multiply it. Sales will be at the rate of $3 per pound. Total sales will be total pounds multiplied 3. Second, total pounds multiplied 3. And similarly, third case, total number of pounds multiply with 3. So now let's compare the two options. So we have two options here. This is our one option, and this is our second option in the red. In the first option, if we sell 5,000 containers in a month and make candies, then our total contribution from profit will be 10,270. And if we sell only honey, we don't sell any candies, then our total contribution, total profit will be 11,250. So at 5,000 containers limit, at our capacity of 5,000, we cannot make profit by selling candies because the contribution is low. In that case, it is better for the company to sell only the honey, don't make any candies. But at 6,000 containers level, our profit by selling candies will be 13,500, and by selling honey will be 13,500. So uh, at 6,000 level, we are indifferent. It doesn't matter whether we sell the candies or we sell the honey, we will be same in both the condition. What about at 7,000? So our profit will be 16,730, and from only honey we could get only 15,750. Therefore, we can clearly see higher profit by selling the candies instead of selling the honey, which we have calculated before, right? So if we sell, to justify the production of candies, we need to sell at least 6,000 containers. That is shown here. Below 6,000, our profit will suffer, and ahead of 6,000, we will be able to more profit.